Good morning, and thanks so much for tuning in. You're watching Trade Talk on BK Prime. My name is Alex Matthew. Now, we are setting up for possibly a positive start to the trading week, but then the context is important, as always, to understand. And that context is that the global cues are not really as supportive as they have been in the past. They are just a tad bit mixed at the start of trade this morning. You have, of course, on Friday, the fact that we ended an 8-day gaining streak, and the texture was very dramatically different from what it had been in those 8 trading sessions where we saw gains, and you saw the market breadth very firmly tilted in favor of the declines. Among the key gainers, you had the Nifty PSU Bank Index that gained the most, and it was followed by the Auto Index. Of course, one of the big talking points over the course of the week was, in fact, several auto companies. Mahindra & Mahindra also gaining quite substantially in the week. You saw the FMCG index and the realty index that lost significant ground on Friday. This week, of course, one of the big talking points is going to be technology, and that's because the IT sector will start reporting its earnings as early as Wednesday. You have HCL Tech as well as TCS that will report their numbers for the first quarter, and then you'll have Wipro reporting numbers on Thursday. A few numbers to bear in mind with regard to the index. 19,450 is going to be watched very closely. If you breach that on the downside and stay there consistently, then you will continue to see downward pressure is the expectation that we have. And for the Nifty Bank, you have 45,000 that's going to act as a very key level over the course of the coming sessions. The 20-day simple moving average is what you need to watch out for as well, and that's 44,300 to 44,200 or thereabouts. But let's quickly go to the stocks that you need to bear in mind. Reliance Industries saw some big moves over the course of last week, and it could be in focus at the start of this week as well. Sajith is joining in to tell you why, and there are a few talking points this morning. Morning, Sajith.
Morning.
Sajid, the first talking point, of course, has to do with the Geo Financial Services demerger and listing. What can you tell us about that?
Okay, so last week we saw Geo Financial Services getting the NCLT approval for the entire scheme of arrangement, which meant that they're going to demerge the Geo Financial Services or the assets under JFS into a separate company. And now RIL has come out with a record date for that company, which is July 20th. If you look at Geo Financial Services, it has a couple of fintech businesses, which includes insurance broking, payments gateway, payments bank, and all other forays which Reliance wants to do into the fintech space will be happening through Geo Financial Services. It has a net worth or assets of nearly 19,000 odd crores, and what is important is it holds 6.3% treasury stock of Reliance Industries, which will be used to monetize in the future to get all future capital for this company. Remember, fintech requires a lot of capital, and that capital will be supplied to monetization of Reliance shares. So if you look at the book value of Reliance or Geo Financial Services, once it comes into effect from July 20th, it would be somewhere around 190 rupees per share or so, which includes more than 1 lakh crore of Reliance shares which are there in treasury stock. We don't know how much means the street is divided on the kind of valuation that JFS would get, but there would be a discount to that treasury stock that will be there. And when the demerger happens effective from July 20th, which is a record date, there will be a price adjustment to the share price of Reliance Industries, and that will be reflected through a correction in the price. So far, in the indices, whenever a company goes for a demerger, the stock is removed from the index. But in this case, there may be an exception, and they will allow for a session that may happen where the adjustment for the stock may happen because for the demerger, and then the trading begins on that stock.
Okay, very important. And also the question mark, as you pointed out, the division in the valuation of Geo Financial Services that needs to be resolved in the coming days. The other big story to talk about is Reliance Retail, and perhaps the second attempt, if you can call it that, to squeeze out the minority shareholders of Reliance Retail. What can you tell us about that?
We need to get a perspective on this. Reliance's holding arm for retail ventures is Reliance Retail Ventures Limited. There it had sold roughly around 10 odd percent to many of the marquee investors in 2020 at the valuation of 4.2 lakh crores. Reliance Retail Limited is a subsidiary of Reliance Retail Ventures Limited. Now, initially, what Reliance Retail was formed, and there were ESOPs which were issued to employees and staff. Those shares found their way into the in the OTC market because employees sold off those shares in the OTC market, and then retail investors took a portion of it. That's a very small portion; it's less than a 1% portion, but it continues to be held by the minority investors. Reliance has been trying to buy out those shares through various methods. I think, if I'm not wrong, in 2020, December 20, they tried to do it through a swap ratio where through a private entity, which was held by two Reliance employees, with a swap ratio of 4 shares of Reliance Retail for every 1 share of Reliance. But that did not go through because investors did not want to exit Reliance Retail, given the fact that the kind of valuation Reliance Retail Ventures was getting because of Reliance Retail. Now what Reliance has done is that they have come out with a scheme wherein they will buy out these shares at 1360 per share, which is 3.5 times more than what they were, what was the value given to Reliance Retail in 2020. And this would mean that they will reduce the capital to that extent after buying out, and that is something which is going to be watched out very carefully, because 1360 is much lower than the OTC price for Reliance Retail, which is between 2,500 to 3,000 rupees, which is getting traded in the market. So it's something very interesting to see because it's an NCLT process, and while the investors are very small in numbers, they will of course go and object to this pricing of it, and Reliance may end up paying a higher price than 1360 rupees.
But then, so just as a follow-up, what if there are no takers, just like the last time?
There's nothing called no takers, because the scheme, it will be done through. So the company has gone ahead and said they're going to do it through a scheme, through an NCLT process.
Okay.
The only thing it's going to be is the friction point would be the pricing.
Which you point out is half of what is
see, OTC market has a very high premium, so they may not get what they are asking for, but 1360 could be a base price, and there could be a premium that Reliance will end up with.
So a lot, Sajid, to bear in mind with regard to Reliance Industries. Thank you so much for joining in, for giving us that perspective. Reliance Industries in the past week, as I mentioned, had some big moves, and as a result of which pulled the indices as well. And that's certainly something to watch out for in trade today. But IT sector is going to be in focus, as I mentioned right at the start, and that's on account of earnings. And there are a lot of talking points with regard to the first quarter, because that will give you a sense of how things will pan out for the rest of the year as well. Tushar is joining in to give us some perspective on what to expect. Tushar, 3 of the top 5 IT companies that are going to be reporting their first quarter numbers this week. What are the top headlines that you will look for in those earnings?
Like you mentioned, Alex, we started off with saying that at the end of the last quarter, we said that the first half will be a washout. But now we are looking at the FY24 entirely to be a washout. So the first quarter results will be a key pointer in that respect. The impact of project ramp downs that we saw in the March quarter may start reflecting in the numbers this quarter. What we need to see, however, is how the outlook what the companies are guaranteeing us are talking about, because that will show us how the rest of the year is going to progress. The generative AI announcements that was flooded the first quarter may not have a lot of impact. What we also want to see is that how the pricing will pan out. The pricing will be stable, but we want to look at the mix. So whether it's discretionary or whether it's efficiency. If it's moving towards more efficiency, that will have an impact on the margins, as well as the fact that there are wage hikes in this quarter because it's the start of the new year. So that will also have a bearing on the margins.
And so specifically on the workforce, would you also, as somebody that's been looking at this space, look at a hiring strategy for the rest of the year? There's, I believe, only one major company that has given a guidance.
So only TCS so far has said that we have hired about 46,000 freshers for this year. Rest of the companies have been non-committal on their fresher hiring so far this year. So given how the demand scenario pans out for the full year, I think hiring will be paced accordingly. So if there is no such clarification on those sides, or if there is weakness that goes on through for the entire year, that may have an impact on hiring. The only bright spot may be generative AI, because that is a new thing coming up. So there will be people who will be trained on it. So maybe in that aspect, there will be some amount of addition, but it will not be minuscule, if I would say.
The other big talking point, of course, is the size of deal wins and execution, right? And I think you kind of alluded to that. But are there going to be any trends to watch out for, at least for the big five, with regard to the size of the deals?
Size of the deals, as well as this new thing called insourcing. So in the last quarter, a big deal by TCS had a big deal with Transamerica in the US, which was scrapped because Transamerica said that we'll do our IT services ourselves. TCS did follow up with a big deal with something with STEM, a pension fund in the UK, but we are seeing that the weakness is still continuing in the US in that sense. Europe may turn out to be a savior, but the project delays, the project ramp downs has reduced the deal making pie, and there are more players fighting for a smaller pie. So we'll see the pricing factor coming down in that respect. So that is the impact that we'll see right now.
Fantastic. So there are a lot of things to watch out for. Of course, we bring you all of those updates live. Tushar, thank you so much for joining in, for giving us that perspective.
Thanks.
All right. So the IT pack, all of this week is going to be in focus. But remember, the key numbers or the key names to watch out for: HCL Tech as well as TCS on Wednesday, and then Wipro on Thursday. Another pack of stocks that has been buzzing all of this year, in fact, since March of this year, has been the insurance pack. And there are several aspects as to why that has taken place. Changes in the budget that led to certain purchases before the end of the financial year, certain other business updates. We've got a very interesting note that has come out from MK that kind of sums that up and also looks forward to see whether or not this kind of gain that you've seen in these stocks is justified based on the business updates that these companies have given. Monal is joining in to give you some perspective on that. Morning, Monal.
Morning.
What does this note tell us?
Yeah, so, just as you mentioned, these insurance stocks have been rallying by like 20 to 50% since mid of March. And this was post the fact that these life insurance stocks hit rock bottom after the budget announcement, which capped and taxed all of these high-ticket policies of premium outgoes that was higher than 5 lakhs. So now they're saying that the current run-up is due to the lower than expected budget impact and also attractive valuation because of the stock price correction. Now, but MK has a very interesting point to make here. They say that is it that the market is putting the cart before the horse? Now here, what they're trying to say is that the long-term perspective, the valuations may remain attractive, but medium-term growth prospects are likely to be slightly lesser than what it would have been had that budget change not happened. So, of course, the rally, it's up to you all to decide, whether the rally is justified or not, of course. But overall, it expects that life insurers will see a muted first quarter, post, of course, a bumper Q4, because a lot of people went in for the buying of the high tax policies before March. And now, but for general insurers, they're saying that they're expecting good numbers in Q1. So that's a positive.
Okay. So, and by the way, in case you're not familiar, this is referring to those life insurance policies. There's a cap on the overall premium that you can pay with regard to the taxation of those policies, without going into too much detail. There's another update, Monal, you're tracking Pharma very closely as well. Aurobindo Pharma has signed an agreement or an exclusive deal with the US-based biofacturer for selling a biosimilar. What can you tell us about the deal, and what is the size of the market that it will address?
Yeah, so the deal is about exclusively selling a biosimilar which is used to treat Crohn's diseases, psoriasis, arthritis. Now, for this, Aurobindo is going to pay biofacturer a license fee of $33.5 million, which is close to 280 crore rupees. Now, while its subsidiary, Curatech, which is going to be selling this and marketing this biosimilar, is going to receive 57% to 60% of the profits from the marketing and sales, depending on the market that it addresses. Now, overall market size is around $9.72 billion, which is close to 80,000 crore rupees as of 2022. And it's being sold under a brand name called Stellara currently. Now it will, like Curatech will now have global manufacturing rights for this biosimilar, which is called ustekinumab. Now filing of this biosimilar is going to take place in for India and emerging markets in 2024. And for the regulated markets like the US, it's going to be around 26. So you can expect revenues from this product for Aurobindo from all of these years. Also, there's a phase 3 trial which is pending on the product. So successful trial and the filing, plant clearances and approvals, all of these would be required before this product is monetized, which seems like a big deal.
Okay. How many times do you practice ustekinumab? Okay, so that's the point. Thank you so much, Monal, for joining in. One of the main reasons why I don't actively track the pharma space is that I can't pronounce the names. But on a light note, of course, there are a couple of stocks that you want to watch out for on account of business updates. And one of them is a new age company. The other is a company that quite a few of you will be familiar with. Sula is the first one that we're talking about, of course. And Mika is joining in to give you an update on that. Mika, good update from Sula,
Yes.
would you say?
Yes. So Sulavans has come up with their Q1 updates for this financial year. And the company's recorded strong double-digit sales growth for this quarter, recording its highest ever Q1 net revenue, which was up 17% year-on-year, with elite and premium brands leading with 30% growth. Sula's own brands outperformed, and the revenue sales were up 24% year-on-year to 103.5 crores this quarter. The wine tourism sector of Sula was also up 11% to 11.4 crores, and 70% jump in visitor numbers to a Domain Sula winery, which is just outside Bangalore, has also been reported. Additionally, during the quarter, the company sold off its lowest priced heritage brand, which was only previously available in the state of Karnataka. And we also came up with one more update, which was Nykaa.
Yeah, I was going to ask you.
So basically, Nykaa on a consolidated level expects revenue to grow in the mid-20s year-on-year this quarter. Consumption in the beauty and personal care category is expected to remain strong despite the discretionary spend slowdown. The BPC vertical is expected to grow in the low 20s, aided by strong urban demand and also the success of their flagship sale, which is the Pink Summer Sale. The apparel industry has been impacted because of the discretionary slowdown this quarter, and although Nykaa expects the discretionary spending to improve with the revival of the seasonal demand, the fashion business has witnessed a gradual improvement in order volume with on a year-on-year basis, and Nykaa expects the net sale volume for this quarter to be in the low to mid-teens. I have two brokerages that have commented on the same. Macquarie has maintained its underperform rating on Nykaa with a target price of 143.35 rupees, and the brokerage expects a 25% sales growth this quarter. And Morgan Stanley is overweight on the stock with a target price of 184 rupees.
All right. Thanks so much, Mika, for that update. Two stocks, like I said, that you have to watch out for in trade today. Nykaa, maybe just a tad bit muted on account of that number. But of course, Sula is looking strong as ever. We've got a couple more updates to tell you about. Hindustan Zinc is the next counter that you might want to focus on. And this is on account of an interim dividend payment. But more important, I think, and Rishi is joining in to tell you about that, more important than just that is what the parent gets from this interim dividend payment, because we've seen a number of dividends being paid out in the recent past.
Absolutely. As you said, so Vedanta, which owns almost 65% stake in Hindustan Zinc, is expected to earn about 1,920 crores from this interim dividend. And this dividend that was announced was for rupees 7 per share, which is a 350% of the face value of 2 rupees. Now, the record date for this dividend is set for July 15th. But as I mentioned earlier, this comes within a much larger context of its parent and holding company, that is Vedanta Resources, and its ability to service its debt obligations. Now, in FY23, Vedanta Limited earned about 20,700 crore rupees from dividends from its subsidiary, that is Hindustan Zinc. Now, eventually, this cash also helped Vedanta to announce its own dividend, which was over 85 rupees for FY23. And of this, a major chunk of this was transferred to its holding company, which is Vedanta Resources, that is based out of London. Now, Vedanta Resources has debt worth of 500 million that is maturing in December this quarter, and another $1 billion of debt that is maturing in January of 2024. Now, but on the plus side, if you also look at, is the shareholders who are benefiting from these from this trend of dividend payouts, and that was clearly seen in the stock price of Hindustan Zinc, which rallied about 9.34% in the last 2 days of the previous week when the board was considering an interim dividend.
Yeah, certainly. I was going to ask you about that spurt that we saw towards the end of last week in the stock price, and I'm glad that you pointed that out. Thanks so much, Rishi, for joining in and for telling us about Hindustan Zinc. It'll be interesting, in fact, to look at, as we look at over the course of the last 6 months or so, the amount of dividends that have been paid out by Vedanta-owned companies. Let's turn also to IOC, and here there is a fundraise plan announcement and also a joint venture to tell you about. Himansh is joining in to talk about this. Himansh, quite a significant amount of money that will be raised by IOC and also the joint venture. What's that about?
Right. IOCL has been very active in the past right now with its deal making. So the board of directors has recently approved a raising of 22,000 odd crores through an equity rights issue. The government, which holds roughly 51.5% of the PSU refiner, is expected to subscribe to the issue. In the budget this year, the government had set aside roughly 30,000 odd crores for providing capital support to the 3 state refiners. And I think all this goes in the government's effort to, transition these state refiners to a net zero carbon emissions in the near future. However, Indian Oil has not yet specified the projects it will be investing in the coming times. Additionally, the directors of Indian Oil have approved the formation of a joint venture with Sun Mobility Singapore for the battery swapping business in India, and they'll be forming a private. It will be a private collaboration with a 50-50 partnership seen from both sides. Indian Oil will be infusing roughly 18,000 crores in the coming years until FY27 through its equity contribution. The board has also passed an investment of 78 million in Indian Oil's Singapore subsidiary for acquiring preference shares and warrants of Sun Mobility Singapore. This follows, like I said, the increased activity in the recent times. Last week, Thursday, for example, Indian Oil and Praj Industries signed a term sheet for a joint venture to move on to strengthen biofuels production in India. And despite the quite of interest in the stock, and we saw it gain over 9% in the last week, and also hit a 52-week high of a little over 101 on Friday. Of all the analysts tracking the stock, with 37 of them, 26 recommend a buy, 8 recommend a hold, and 3 recommend a sell. And the 52-week target price also implies a potential upside of roughly 1.3%. So exciting time for Indian Oil ahead, and it'll be interesting to see the stock in today's session.
Thank you so much, Himansh, for that. IOCL, as Himansh points out, is a stock that you want to watch out for and trade. A number of other notifications that we've paid attention to, and Saloni is joining in to tell you about those. 4 or 5 more stocks, Saloni, to talk about this morning. What do you have for us?
So first we have Samvardhan Motherson International.
Motherson, yes.
Motherson International. So on 7th July, the company entered into an agreement to acquire 100% stake in Rollon Hydraulics Private Limited, following which Rollon will be housed under the Precision Metals and Modules division of the company. Next, coming to Max Ventures and Industries, the real estate arm of the company, which is Max Estates, achieved pre-formal launch sales of over rupees 1,800 crore for its first luxury residential project, Estate 128, which is located in Noida. The estate is to be built across 10 acres with 3 high-rise towers having 201 units. Third, talking about Suzlon Energy, the board of the company approved fundraising of rupees 2,000 crores on a meeting that was held on 7th of July. The company is yet to decide the way in which these funds are to be raised. The next stock we have is ITC. The company clarified on news claiming that the demerger of the hotel business is underway. The company stated that it remains committed to implementing its asset right strategy with respect to the hotel business. By focusing on sweating existing assets, creating additional revenue streams, and pursuing alternate structures in line with industry recovery dynamics. Then we have big news for Hindustan Aeronautics. The company signed a contract worth rupees 458.87 crores for the supply of 2 Dornier 228 aircrafts to the Indian Coast Guard on the 7th of July. Lastly, speaking of Adani Enterprises, a wholly owned subsidiary of the company, that is Adani Digital Labs, acquired 29.81% stake of Stark Enterprises Private Limited on 7th July. The cost of acquisition of the stake stands to be rupees 3.56 crores.
Absolutely. Thank you so much, Saloni, for that update. One last discussion point, and that has to do with the primary market. NSDL is not yet the counter, but the company that we're focusing on. Sajid is back to tell us more about that. Sajid, this is going to be an offer for sale, and quite a few large investors, if I remember correctly, IDBI Bank, you have NSE, you have HDFC Bank as well.
Yes.
What can you tell us about?
So, they filed offer for sale, DRHP, with the regulator, and it will take at least 30 to 60 days before the clearance comes in. But it's the offer for sale is for 5.7 crore shares. Though they haven't given the value, it can be assumed based on the comparative valuation with CDSL, the value could be in the range of 3,500 to 4,000 crores in the IPO, which gives it a valuation of 12 to 14,000 crores, because CDSL is currently trading at 12,000 or about 2 to 12,000 crores in market cap there. Now, as Alex, you were mentioning, you have IDBI Bank, which holds nearly 26%, NSE holding 24%, and others like SBI, HDFC Bank, and Suti. They hold some stake in this venture, and they will be reducing that. Especially IDBI Bank and NSE would be important, because they have to reduce the stake to below 15% as per regulatory requirement. So IDBI Bank will be offloading 11.1% stake, and NSE will be offloading nearly 9% stake. So that will bring down the stake to below 15% as per regulatory requirement by the end of the year. So that target of meeting that last quarter of this calendar year is there for all the companies. We saw BSE reducing stake in CDSL a couple of weeks back, and now NSE has to do it. I think October is the deadline. So my sense is by September, the IPO should hit the market, and by October they should be able to meet the deadline.
Quick point on depository services. So NSDL is primarily depository services, right?
NSDL is a company which has depository services, and it also has e-governance services.
Okay.
So it does a lot of other work. So if you look at the financials, 1,000 odd crores in revenue for FY23 compared to 555 crores. I'm talking of income from operation, because these companies have a lot of other income coming in from interest and dividends, and which they get. But 1,000 crores versus 555 crores for CDSL. CDSL has a profit of 275 odd crores, and they have 232 crores because they are into very niche businesses and new businesses. So there's a cash, burn which is happening there. But valuation wise, I would say that NSDL would get a premium over CDSL because of the kind of services they offer, which includes e-governance services across states and other stuff as well.
Which is why I was asking. Thank you so much, Sajid, for joining in and for giving us that perspective. Well, we've discussed quite a few stocks, and in fact, one that is not yet listed, NSDL, is something that you want to watch out for. We'll be going live in just a short while with all the coverage for the markets. We're just a few minutes away. So do stay tuned. You'll find all of that right here on BQ Prime.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. 3 big money managers describe the size of this opportunity. 2 of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we round it off with 2 of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on BQ Prime and NDTV.